This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk, and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, Emanuel, Datt, thanks very much for coming back on the show. Always great to sit down and have a chat with you. Before we get into your stock pick of choice, I just thought we'd start with Datt Capital and get an overview of how you guys look to invest.
Sure, Chris. Thanks for having us back. So Datt Capital, we tend to focus on growth and special situation opportunities. And this is along the lines which we'll speak on today on a very unique and special situation we feel that's present today.
And talk me through that situation. What space is it in?
Yeah, so this situation is in the tin space. So tin itself is quite a niche metal, but it's very unique in the sense that it's unsubstitutable by anything else. So effectively, tin is very much a critical metal in the sense of maintaining a modern lifestyle that we're all used to today. So the majority of tin is used in solder for critical electronic components such as circuit boards for everyday machines that we use today. And so we are expecting that tin usage and demand is actually going to rise going forward in line with technological progress. So for example, you can think of things like the transition towards the green economy, clean power, EVs, all that sort of stuff relies quite heavily on computing components, such as circuit boards. So it's actually very much aligned with the rise in the green economy overall.
And we've heard so much about the importance of copper in the green economy, nickel, lithium and cobalt. It feels like tin, in terms of its narrative and the importance for the green economy, it hasn't quite hit the mainstream yet. Is that fair from your view?
Yeah, I'd say so. I think it hasn't quite captured the public's imagination. Rio Tinto actually identified back in 2018 that tin actually had the most leverage to the transition towards a green economy. And I think a lot of that ultimately comes down to the fact that with tin supply itself, it's actually quite limited. So to give you a little bit of context, so China and Indonesia are the largest sources of tin production, followed by Myanmar, Russia, Bolivia, Peru, and the DRC in Africa. So, global tin production as a whole has been relatively stable in the past. Even though demand has exceeded supply for a long period of time, the gap has historically been filled via the sell down of strategic stockpiles held by various nations around the world. Now those stockpiles are depleted, and also some primary production suppliers are actually depleting, for example, in Myanmar. So on one hand, you have a demand shock that's coming up as a result of the adoption of all these various new technologies that's driving demand. But on the other side, you have declining and diminishing supply. So it really sets up quite an interesting situation.
And it may not be in the mainstream news yet, but certainly the price has indicated that there's a supply shortage, if you like. Talk us through what the price has done for tin over the last, call it 3 months, and maybe just illustrate just how short the major exchanges are on tin supplies.
Yeah, absolutely. So I'd probably say over the last year, the tin price has risen over 100%. So today it trades at over $60,000 a tonne. This is in Australian dollars. And probably since the start of the year, I'd say the major commodity exchanges for the future contracts have been desperately short of supply. And that's led to quite a unique situation in futures that we call backwardation, which is effectively where the 1 month contract trades at a much higher price than longer duration contracts. Generally, the opposite is true, given that for a metal or for any sort of commodity, you have storage costs that are incurred. So it's quite a unique situation to be in for almost a year now. And it really demonstrates how tight the spot market is at this point in time. So, given the overall context, we think that there's definitely a case for tin to trade sustainably higher than the present pricing. And as a niche metal itself, we've seen in the past that these can go up tremendously, go 5-10x. You can only think about cobalt back in 2017, and also looking a bit further back, uranium also did a similar gig in 2006, 2007. So there's plenty of precedent for this sort of market setup, and that's what we find so exciting in these special situations.
And we'll get into your actual stock pick in a minute, but it's also a commodity that's really hard to play. There's not many producers, and particularly not many producers that give you a clean exposure. Of the few that I follow, it also appears that they haven't been that closely correlated to the price of tin. Have you found that with some of the tin stocks you've been following?
Yeah, absolutely. And I think ultimately our preference would be to invest in a producer, because we know that ultimately a producer is capturing the actual value in the commodity price. Not to say that speckies won't go up, or those with undeveloped resources.
Don't say anything bad about the speckies around here, Emanuel.
Yeah, but ultimately, in these sort of moves, you'd see more speculative companies go up a lot more than producers. But ultimately, we think it's quite prudent to have a core position in a producer and maybe top up, take a portfolio approach, I guess, and spread your money amongst the various speckies that you might want to back.
And what stock did you want to dive into today?
Yeah, so I'd like to talk about Metals X, which is one of only 2 listed producers in Western markets, at least. And so Metals X operates a mine known as the Renison Project that's located in Tasmania. This is a world-class asset that has produced for well over 100 years. And the deposit itself is still being extended, and production is projected to increase in the coming years ahead. Renison itself is actually 50% owned by Yunnan Tin, which is the world's largest tin producer. So that really gives you an indication of the quality of this particular asset.
And talk me through the Metals X journey, because I reckon I looked at it a couple of years ago when I was exploring different potential copper exposures. What's their history? Yeah. How have they cleaned the business up, and then we'll dig a little bit deeper into the numbers after that.
Yeah, sure. So Metals X, I think historically the Renison mine was its flagship project. And then over the years, they had tried to dabble around with various other commodities, most notably copper and nickel. So they actually took over another listed company, which held the Nifty Copper Project in WA. But also, they at one stage they also had, or they still presently have, a large nickel laterite resource that's currently undeveloped. So these 2 ventures were not successful ultimately, but now the management team have actually been put in place by the company's major shareholder, who are quite a prominent resource investor known as APAC Resources, and they've really enforced cost discipline and focus on the company. So these the copper and nickel assets themselves have basically been spun out, and Metals X will basically proceed forward as a pure tin play, from my understanding.
And what did you make of the company's recent quarterly announcements?
Yeah, well, I think it definitely shows that Renison is just an absolute cash machine at current prices. In this last quarter, they achieved tin pricing, or realized tin pricing, of about 44,000 a tonne. We actually expect in this existing quarter that pricing will rise materially to about 55,000 a tonne. So 25% Q on Q growth in pricing is pretty damn good by anyone's metric, and that should theoretically drop straight down to the bottom line. I also think an interesting aspect is that Metals X also have quite significant historical losses that can be offset against current earnings. So basically, it's just cash that drops straight into their bank account with that's non-taxable effectively. So that's a really attractive aspect for us as well.
And talk me through some of those numbers. What's their market cap? What's their earnings?
Yeah, sure. So their market cap at present is a little over 300 mil. In this last quarter, the top line revenue was about 110 million off the top of my head. Mm-hmm. And about half of that was just straight EBITDA. They have a 50% share, so you extrapolate that, and that's probably about 25 mil in EBITDA, net to MLX. So from my perspective, if you're assuming that, last quarter they achieved 44,000, and you annualize that, it's really trading at a 3 times EBITDA multiple, and not that. I think that's really cheap considering the strategic nature of the resource, but also there's so many different growth avenues as well in terms of the production, but also the growth projects itself from the company.
And talk to me about their balance sheet. What does that look like?
Yeah, so it's pretty much debt-free at this point in time. Printing cash, plenty of growth assets that they hold. Probably the most prominent that I highlight is their Tailings project, which is basically a tailings reprocessing operation. And the really interesting thing is, as we mentioned about Speckies in the past, that the actual grade of this tailings deposit or dam or whatever you want to call it is probably about double of what you'd see in any sort of speculative tin deposit itself. So we sort of ran the numbers when the tin price was considerably lower, and we actually thought that, Tailings, if they could get this off the ground, would be worth 200 to 300 mil odd in NPV. So you can just expect, with significantly higher tin pricing today, that will be worth a hell of a lot of money, and they certainly do seem to have appetite to pursue this project and probably even cash fund it, given they're just printing cash like crazy.
And given it is so hard for either individual investors or other mining companies to get exposure to tin, do you think there's a chance that a bigger company will come knocking and look to acquire Metals X?
Yeah, absolutely. I think there's definitely the potential there. As I mentioned, Yunnan Tin hold 50% of Renison, so they are very well acquainted with the operation and understand the quality and the strategic nature of the resource itself. I think that potentially there could be FIRB implications or some conflict, but ultimately they already own 50%. So I think that may not be too big a deal. This is just my guesstimate, by the way. But saying that, I think it's definitely an attractive proposition, even for example, a mid-tier miner like IGO. This would be a really attractive asset for someone like them who wants or desires exposure to the transition towards clean energy and electrification, effectively.
Beautiful. Well, it's a great story, mate. Really appreciate you walking through it. It's always done with a lot of clarity. So thanks again for coming on the show.
Yeah, no worries. Thanks for having us, Chris.
This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.